Thank you. Good morning. And let's start with a quote from the IMF, which may be not the most obvious way to start a discussion on workplace savings, but recently the IMF quoted that in spite of the large fiscal costs of the current economic crisis, the major threat to long-term fiscal solvency is still represented by ageing populations. And from a Morrisons perspective, this is really the pensions and auto-enrolment as a whole is really part of a larger picture in making sure that they can deal with the demographic challenges that we have as a country and I guess as a global civilization. Now, pensions are definitely front page news, probably more so now than at any time in my career. Sadly, not always, or probably not ever, positive news. So we're seeing pensions making the front pages for funds melting down, investment falls, strikes over public sector and private sector pensions, defined benefit schemes being closed. All of the news around pensions in the wider society is all typically very negative, and this builds quite a challenging environment to be making any kind of pension initiatives or saving initiatives in the workforce. And we knew that trust was an issue for the colleagues within Morrisons. Now, from a government perspective, clearly you're probably all very much aware of the changes that are being introduced across the piece by government. We've got the increase in state pension age. People now working on to at least 68, and in all expectations, some people in the workforce probably not getting their state pension age maybe until at least 70 once the reforms work their way through fully. We've had the removal of the default retirement age last year, so people now can't be exited from a business purely on the event of age. We're seeing a much more flexible workforce and people working beyond the state pension age. Got the state pension reform, so the moves towards a flat rate pension, possibly, maybe not, but the reforms around state pension absolutely critical to the retirement environment in the UK, and obviously, and not least, auto-enrolment. And Morrisons is one of the very few companies that are now in an auto-enrolment environment as of last week. Now, from a business perspective, this is a huge amount of change to get their heads around, and looking at it from a colleague experience, a huge amount of change as well to be trying to communicate positive changes to employees.
Okay, so what about Morrisons as a business? Well, so Morrisons is a vertically integrated business. So many of you will be aware that we have around 480 shops across the UK, but in addition to that, we're the second largest food manufacturer. We have an abattoir in Colne, and we have a large logistics division that transports all our products all over the UK. In addition to that, we have a sizable head office environment with 2,000 colleagues based in Bradford, which means that we have 135,000 employees across the UK in some 500 different locations. Now, that's no mean feat when it comes to a communications and engagement exercise. And as Mark and Maggie rightly pointed out, we're the fourth largest private sector employer in the UK, which meant that our early staging date was the 1st of October. So we're one of 4 businesses that have currently gone through this process. That was a week last Monday, and it feels a bit like a lifetime ago now. So we have a very diverse workforce. Many of our colleagues don't have English as a first language, but Morrisons is all about creating a real lifetime partnership with its colleagues. Around 600 people every year celebrate 25-year anniversaries with Morrisons, and there's a real shop floor to top floor mentality. So many of the shop managers are promoted from within. So people really join Morrisons as a career for life. And they've done an awful lot of work in recent years to improve the employee proposition more generally. They improved their maternity, paternity, family-friendly policies last year. But the one element that was maybe not as strong as it could be was their pension proposition. It was a traditional DC scheme. But I think it's fair to say participation rates were relatively low. Around 10% of the workforce had a pension provision, and that's comparatively low to other retailers in the market. So when we started the communications exercise, we knew we had a real challenge. For all the reasons Mark outlined, we knew that colleagues' trust and understanding in pensions was really pretty low. We did a lot of research, and we went out and had some conversations with our colleagues to understand how they were thinking and feeling around about 6 or 7 months before the auto-enrolment process kicked off. And what our colleagues were telling us was that they were struggling to get through today. Today's economic environment meant that, you know, the prospect of saving for a pension was just something that they weren't even prepared to consider. Getting through today was a real challenge for them. Every time they looked in a newspaper or on the TV, there was some bad news. It was all really scary for them. They were worried that they wouldn't be able to afford to retire and they were going to have to keep on working. So in essence, it was clear that they needed some help.
Excellent. So the challenge facing Morrisons and most employers is that without a significant change in pension participation, pension savings, people will not be able to afford to stop work. And fundamentally, Morrisons is very comfortable with people working beyond normal retirement age. There are already thousands of people within Morrisons working beyond state pension age. But the issue for the business is they don't want people to be working beyond state pension age because they have to. They're happy for them to be doing it on a choice perspective, but they really want to start building an environment where people can retire on their own terms. So auto-enrolment was certainly a catalyst for reviewing this. It could have been looked at as a compliance exercise and just putting in place the operational procedures to meet the requirements. But Morrisons took the active decision to use auto-enrolment as an opportunity to completely change the way that pension participation and pension is promoted within the workplace. And to do that involved not just a communication exercise, but a review of the whole pension environment and schemes within the business, and a review of how the organisation communicated and engaged with employees. So auto-enrolment could have been a sort of sheep dip exercise. People could have been washed through the auto-enrolment, opt-in or opt-out kind of process. But that absolutely wasn't the type of experience that the organisation was wanting to drive. And so making the DC scheme a compliant DC scheme in a full auto-enrolment environment from day one was not the preferred approach. There are a number of other drivers which the business felt were meaning that the DC scheme wasn't actually meeting a lot of the key objectives that it wanted to in terms of engagement with the workforce. So the business wants to make pension membership not just feel like an obligatory thing within the workforce, but make sure people value and trust saving into pension and building up funds for their retirement.
So given that we wanted to really engage our colleagues and, as I mentioned earlier, build and continue that life partnership with them, we looked at what our strategy was going to entail. So we knew we had a real challenge in helping our colleagues understand why saving was important, why they really had to start to take this seriously. The second element of the strategy was looking at actually how we were going to do that. So we needed to give our colleagues some real tangible and practical advice as to how they could save up some money from their current wages. And then thirdly, as Mark alluded to, a review of our pension scheme meant that we wanted to be in a position where we could offer our colleagues a really great pension scheme to join with an element of guarantee. So how did we go about that? Well, we joined forces with Alvin Hall. He's the financial guru from the States. He's been in the media quite a lot. It's fair to say I think he's possibly the most enthusiastic individual I have ever come across. And he's been out and about with our colleagues, and I'll talk to you about some of the things we've done in a second. But we've signed a 3-year deal with Alvin to work with our colleagues on a real long-term basis to help our colleagues understand why saving is important. So as I mentioned earlier, many of our colleagues don't have English as a first language, so we really needed to talk to them in easy to understand and accessible language so that they really understood why this was important. We've done some quite interesting things. So one of the things our colleagues was telling us was that they found this whole experience scary. Pensions was just too complicated for them, as were financial matters more broadly. So we looked at establishing champions in each of our 500 different locations. We gave them special tips and training. They joined teleconferences with Alvin on a monthly basis. So they had some real practical advice as to how they could support their colleagues when auto-enrolment and the new pension scheme came into force later in the year. We designed a little brochure called 52 Life-Changing Money Tips, one for each week of the year. And we distributed those to our colleagues. As I'm sure you'll appreciate, our colleagues don't sit in front of computers on a day in, day out basis, so we needed to give them some real tangible ways of getting Alvin's advice in a practical format. This brochure actually was really so popular we had to go and do a second reprint as our colleagues actually started to give that information to their family and their friends. So the reach of the programme that we were developing wasn't just purely for our colleagues, it was for their wider network as well. We looked for some money makeover stars, 3 brave souls, far braver than I would ever hope to be, volunteered to undergo one of Alvin's money makeovers, and you may have seen him do his programme on TV, Your Money or Your Life. It was a very similar experience. They had to provide 3 months' worth of their finances, credit scores, and it's fair to say that he went through those finances within an inch of his life, an experience I certainly wouldn't be putting myself forward for. And he put in place some recommendations and some practical advice as to how they could turn themselves around. One of our gentlemen had defaulted on his mortgage payments twice and was in danger of losing his house. So they had real practical and very real money worries that he was able to help them through. And they recorded video diaries that we were able to show our colleagues online, so that other people could take inspiration and take advice from the experience that they went through. We launched a great website where tips, Alvin's and videos, podcasts were all hosted online. And then we launched, we were keen to get our colleagues money-saving ideas rather than preaching at them. So we launched a competition whereby a colleague could win their 4 weekly pay packet. Unsurprisingly, an extremely popular competition. People emailed their best money-saving ideas. I think it's fair to say some of our colleagues are very creative when it comes to saving money. We've also got some comedians in our midst as well. I won't go into some of the more wild and wacky ideas that were sent through. That was something else that we did. And then Alvin recorded a podcast for every payday. So up until this point, up until about August time, the Save Your Dough programme had focused very much on helping our colleagues save money. We hadn't even touched on the word pension. We hadn't touched on the word retirement. This was all about helping them free up cash in the here and now, so that by August time, we were then in a position to talk more broadly about helping people save for retirement. And similar to the top tips brochure, this was a little booklet that we distributed to everybody. And again, we had to go to reprint as the booklet went wider than our colleagues. And I mentioned the website earlier, where everything was all in one place. You'll notice on the right-hand side there was a little special area for the champions, whereby specific training materials and everything were included within there. So that's a living, breathing website, and I'd encourage you to go and take a look. It's not Googleable, but if you put it in your web browser, saveyourdough.co.uk, you can go and take a look and see some of the work that's been done. So,
Morrisons, the 4th largest food retailer in the UK, built on a commitment of friendly people making great food affordable for everyone. Renowned for helping customers make their money go further, they put in place an initiative to help colleagues be more financially aware too. It's called Save Your Dough.
The purpose of the programme is to help to educate our employees on maximising their finances to help people to make an informed decision. We're going to be launching a great new pension scheme for our colleagues, and we recognise that it's tough out there, the economy is difficult, it's not always easy to save for the future.
And for a special project, we enlisted the help of someone colleagues could relate to, independent financial expert Alvin Hall.
When Morrisons told me they were launching a 3-year Save Your Dough program to help colleagues get the most out of their finances, I was inspired. After all, that's what I've been doing most of my career.
And with the Save Your Dough website acting as a hub, Morrisons colleagues are able to access lots of resources and information, including Alvin's Payday podcasts.
The older you are when you begin contributing to a pension, the more you have to contribute. How long have you worked at Morrisons?
Money makeovers, real colleagues with real money worries.
Going over your finances was one of the most interesting assessments I've ever done. Guess how many transactions show up in your bank account every month on average? 65 transactions every month. You are behind on your mortgage payments.
I hate to admit it, but yes, maybe 2 months.
And you know if you hit the third month, you might be in default. I need to help you find a way out of this.
And an opportunity to share their money-saving ideas. The best within the value of their full weekly pay packet. It's clear that Save Your Dough has encouraged Morrisons colleagues to think differently about their finances. For more on Save Your Dough, please visit the website www.saveyourdough.co.uk.
I told you he was enthusiastic.
Follow that, hey. So yeah, I get to follow that by talking about pension schemes. So that's always a bit daunting. So the third part of the Morrison strategy was as Karen said, a great new pension scheme. And one of the overriding pieces of feedback that came from the colleagues, and really echoed around a lot of research that's been done more widely, is that people generally just really feel uncomfortable around investment, being directly exposed to investment risk and fluctuations, and people don't understand investment decisions that they need to make in a DC scheme. And Morrisons really reflected on that very heavily and decided to take the commitment of underwriting investment returns during the pre-retirement phase and offering a guaranteed pension pot to members through what's referred to as a cash balance scheme, and in Morrisons called the Retirement Saver Plan. Now this is a scheme design that's not particularly widely used in the UK at all. There are a few. They are more commonly used particularly in the States. And they have got since the design phase has been gone through within Morrisons, actually Steve Webb started to promote this type of arrangement quite heavily under the defined ambition term. And the way that the scheme operates is that for a 5% contribution from colleagues, they have a 16% guaranteed pension fund, so 16% of their pension earnings as a guaranteed pension pot each year of service that they build up, and that pot then is revalued in line with inflation as you go forward. So members have no investment choices to make. They have a guarantee of what their pension fund is going to be, and they have complete clarity, therefore, about the size of pension arrangements, and they have that guarantee, which is, from the feedback from Morrisons colleagues, is very, very valued by people in a pensions environment. From a Morrisons point of view, it's a risk-sharing scenario compared to traditional defined benefit schemes because there is no post-retirement risk. And Morrisons are guaranteeing what the retirement fund value will be, but then the conversion of that to a retirement income is then dependent on members' choice in the market at the time. So there is no exposure to the business from longevity or yield issues, but they are underwriting the investment returns prior to retirement. And how that works in a graphical format is that each year the colleagues build up that 16% of their pensionable pay as an entitlement. That year carries forward and is revalued in line with inflation, and each subsequent year of service they build up new blocks of 16% of their earnings in those years. So on an ongoing basis they can see exactly what the retirement fund they're likely to be entitled to at retirement. And Morrisons then underpin that with the normal actuarial and investment processes that sit around a defined benefit scheme. So over the last 18 months that this process has been going through, there's been a number of key issues that Morrisons have learned that I think are relevant more widely. The first is in terms of the structure. This is a huge process which impacts on many, many different parts of the business. And at a very early stage, there's a very clear structure built to the auto-enrolment project. There were 4 discrete work streams that were pulled together. An IT work stream looking at the impact on the systems within the Morrisons business. There's a communications and education work stream which Claire's very ably identified today, the kind of work that goes on, not just around pensions, but around financial education and engagement more widely in the business. There was a scheme selection and design phase to go through all of the necessary routes in terms of actually creating this new scheme for the Retirement Saver Plan. And an area that quite regularly we see overlooked is the business integration element. So what impact does it have on the non-pension issues within the business? So that's the hiring processes, promotions, demotions, acquisitions, other outlying parts of the business. How are they affected? And that within an organisation as complex as Morrisons, was one of the, probably one of the largest work streams. Excuse me. Now, those work streams all had separate leads tasked with delivering the key objectives of those. Those fed into a project group that met weekly to coordinate all of the work that was going on there. And clearly there's overlap. Some of the outputs of some of those groups have an impact on how the other groups develop. So having those all tied together and coherent was really important, particularly as the business leads within those tend to come from quite different functions of the business. So there were people involved from HR, from the pensions team, from IT, from finance, external contractors. So pulling that all together and having very clear decision-making processes within that was absolutely critical to delivering a successful project over the last 2 years. And then there was a monthly steering group which included 3 members of the management board to make sure that the business was fully had full visibility of all of the work that was going on, was able to input in all of the critical areas, and was also able to help forward any kind of sticking points as it went through what was quite a multifunctional and quite complicated project stream. So getting that governance structure in place and having a very clear idea of what the objectives are and having very clear roles and responsibilities within that was absolutely critical to the success of the project over the last couple of years. In addition to this slide I think stands out a little bit from this presentation, is, and it's only for effect as much as anything, this is a kind of a simplification of the processes and communication and interdependencies in the different systems and different divisions within the business. And the message really is the systems that sit behind auto-enrolment need to be automated. There are a lot of complicated triggers in terms of earnings, age, communication, interdependencies between HR, payroll systems and pension schemes. And that really, certainly for an organisation of Morrisons' scale, clearly can't be manual. But for a business of any size, there are huge risks if those are manual processes. So automating the auto-enrolment elements of and the legislative elements of those requirements is absolutely crucial.
I think it's fair to say, as Mark's just alluded to, it's a project that can't really be run as part of BAU and off the side of a desk. Morrisons invested significantly, both in the project broadly, but also in communications. So whilst I've talked to you a lot about the communications activity we did with Save Your Dough, the work and the communications that had to go into consultations from existing schemes and helping colleagues understand what transferring between one scheme and another could mean, what their entitlements to different schemes could be, was fairly enormous and no small task. So if I could give any message here today, then it would be invest in your communications. Morrisons had a dedicated lead, which was myself. It was a real luxury for me to be able to work on one specific project. But you know, the engagement with colleagues and helping them understand how auto-enrolment impacts them as an individual should not be underestimated, and is something that I'd really encourage people to take seriously. So as we stand here today, early indications are pretty good that our approach is working, which I can tell you is something of a relief. We've asked our colleagues what they thought of Save Your Dough, and 44,500 of them have said that Save Your Dough has made a real tangible difference to their finances. In the first week alone, pension participation increased by 60%, which we think is pretty good. 2.5 weeks in, it's more than doubled. So we're pretty pleased with how things have gone. And that's really all we wanted to say. So